Well, good morning, everyone. Thank you very much for joining us wherever you are around the country. I hope your feet are dry. It's been certainly a tough couple of weeks up and down the East Coast, but I hope everyone has been keeping well. Today, we're going to talk about FBT. So whenever the football season starts, it's all the good minds, turn to the fun things like fringe benefits tax. So it's at that time of year again. And for many people, it's probably the one time of the year that they turn their minds to FBT. So these sessions are always well attended by practitioners and professionals who are involved with the fringe benefits tax compliance. So without further ado, I welcome you and my co-commentator for today, Judy White, who's an Associate Director up in our Brisbane practice. And
Good morning.
Before we get going, we'll just touch on a little bit of housekeeping. So there is an opportunity for you to submit questions as we're going through just by using the chat panel or the questions tab on the side. We've received quite a few questions, thankfully, with the registrations, and we'll look to cover as many of those during the session as we can. If not, still do send them through. Judy and I will look to come back to you after the session. After the presentation, the slides will be loaded up and will be available as a handout for you to access. So don't worry if you don't pick up everything as we go through. So there's also a link there to the helpful people and in the webinar at GoTo if you've got any technical difficulties as you go through. And there's myself, James Train. I'm a partner here in BDO's Sydney office, and as I mentioned, Judy White, who's joining us from Brisbane today. So what are we going to touch on? So we'll go through a few different topics today. We'll have a just sort of general overview of FBT, which Judy will take you through. I'll go through some of the recent law changes. We'll then touch on some of the particular FBT and COVID-19 implications. I'll touch on some focus areas for the ATO this year, and then Judy will look at some of the not-for-profit employers, issues particular to them, and some rates and thresholds. So Judy, over to you.
Oh, fantastic. Thank you very much, James. So good morning, everyone. Welcome again to the webinar today. So James and I are very pleased to be presenting to you all, sending you a warm welcome right across Australia. Thanks again for joining us. So yeah, James and I thought we would just touch on a brief overview to kick things up, do a bit of a warm up for you all, get you all back into thinking about that FBT area for this time of year. This first slide here talks about what is fringe benefits tax. So let's get started on that. So just a couple of points in that area. So we've got FBT. FBT is levied on benefits provided to employees in respect of their employment. FBT is generally a tax on employment. It does run a different year than the financial year. It actually runs from 1 April to 31 March. So here we go again, just a couple of weeks away. I just can't believe how time flies. And we will be basically into it for our work for the 2022 FBT year. Also, one question that James and I get a lot might seem fairly clear, but surprisingly is interesting depending on, say, the structure or a group of entities, is that point about FBT is paid by the employer, irrespective of who provides the benefit. So that question quite often is an interesting one. The focus is not on who's providing the benefit. So it might be an associate, perhaps another entity in a group, or it could even be by a third party under some arrangement. So irrespective of who provides the benefit, it's the employer of that person receiving the benefit that does have the FBT liability. So that's just one to look out for. And an employee for FBT purposes, again, not necessarily straightforward. It can be former, future and current employees, and it does extend out to their associates as well. So the types of fringe benefits. So this diagram here is just to get you thinking, just to clarify, these are the sort of areas that are fringe benefits. You can see quite a few common ones there, like car and car parking, entertainment. There can also be board, property, housing, loan fringe benefits and debt waivers. Expense payments are very common one there, expenses paid, living away from home allowances, residual. And just on living away from home allowances, I think it's fair to say that certainly at this time of year that there wouldn't be a week go past that James and I don't get questions in terms of travel versus living away from home versus relocation, and just because the FBT impact can depend so much on the facts. What is that employee actually doing? Are they traveling, or are they living away from home, or have they even relocated? Great. So just moving on to exclusions. So this is what we might want to know a little bit about. How can we not have to worry about fringe benefits at all, fringe benefits tax? So just wanted to cover off first and very important exclusion from what we're talking about today is salary or wages. That has its own taxing system in PAYG withholding, and there is that distinction between something provided to an employee that would fit under salary or wages, taxed under PAYG withholding, and something provided to an employee more along the lines of benefits that would be subject to fringe benefits tax. There are some exemptions from fringe benefits tax as well, including things commonly like relocation, remote areas, work-related, and the minor infrequent type of benefits. We will touch a little bit more on that, but that minor infrequent is generally your less than $300 benefit, which is also provided on a minor infrequent basis, so that's very common. And employee share schemes, just to clarify, they are not in the FBT law. Unfortunately, they are in another area of law, in the income tax law. So, you know, there might still be tax implications, but that's not something that's caught under FBT. Same with deemed dividends. That is covered by the rather delightful, perhaps Division 7A of the income tax legislation, generally speaking. So that is not necessarily something that may come into the FBT net. We also wanted to mention super contributions in particular, because they are where they are made to an Australian compliant super fund or possibly a foreign super fund for a temporary resident. So where the super contributions are made, they are actually excluded from fringe benefits. So this does make a popular salary sacrifice benefit across the board as well. And our last box there, termination payments. So again, just to clarify that those types of payments, like the redundancy, other and on termination payments, early retirement, unused leave, restraint of trade, those things are also not covered by the FBT law. So hopefully that just gives you a little bit of clarity around what is in and what is out of FBT. This particular slide here is on salary sacrifice arrangements. Now, in particular, this is a common practice for not-for-profit employers who have FBT exempt or FBT rebatable status. And just a quick shout out to those of you attending today from the not-for-profit industry, and welcome to you. And I will come back, as James kindly mentioned, towards the end and cover some specific not-for-profit and FBT matters. But just generally talking about salary sacrifice arrangements, the purpose of those arrangements is where you do, say, trade off some future salary for something like benefits. So it might be $100,000 salary and decide to get $90,000 in cash and $10,000 in benefits. So as I mentioned, that's common for the not-for-profit industry. Some of the common benefits, these are just some of them, not all of them, not exhaustive. Things, as I mentioned, like superannuation contributions, also otherwise deductible FBT exempt donations, and vehicles can often be a common item as well. So you might pick up on a little bit of a theme there. Essentially, wherever you can have a benefit that's excluded from FBT, or it might be otherwise deductible, so the value will reduce down for FBT, or it's actually exempt under the FBT Act. So wherever you can get no FBT or very little FBT, then it might broadly be an item that could be of benefit to salary sacrifice, because you're effectively trading your PAYG withholding, less of that, with your FBT. And if FBT is exempt or a smaller amount, then there might be some benefits there. And that's just a very broad touch on what salary sacrifice arrangements mean. And you can see just quickly there the effect as well. So we're saying that the employee can pay less PAYG withholding, and quite often the case, the employer may wish to recover any FBT if there is FBT that does arise under a salary sacrifice arrangement. And very importantly, last point on the slide is the salary sacrifice arrangements can only be prospective. So you do need to do a little bit of planning around that. They can't be retrospective. So they must be for income salary that's not already earned. So you need to have those arrangements in place before the relevant pay date. This slide here just talks about some other tax implications that I'll go through. First of all, so FBT is payable at the top marginal tax rate, so just bearing that in mind, including Medicare levy, so it's a 47% rate. The employer can claim an income tax deduction for the cost of providing fringe benefits, and that actually does include entertainment as well if it's subject to FBT. Also, you can claim a deduction for the FBT paid. Now, may I just mention, for those of you who are from the not-for-profit industry, of course, if your income tax is spent, not as relevant for yourselves, but just broadly in terms of our taxable employers on that one. Employee contributions from after-tax income. So post-tax contributions can reduce the value for fringe benefits tax. Bearing in mind also cash contributions, cash post-tax contributions, say amounts that are taken out of the pay, they are subject to GST though. And if the total taxable value of certain fringe benefits received by an employee in an FBT year exceeds $2,000, so there's a reportable fringe benefit system. So then you have to gross it up at the lower gross up rate, and you as employers are required to then report that on the PAYG payment summaries, now called income statements. Some of you might remember them as group certificates, and just trying to get used to, the new terminology, now income statements under STP. And also dates, very important. What are we working towards? First of all, in the left-hand side there, the payment and lodgement date for FBT returns if the employer is lodging the FBT return themselves is the 23rd of May. Some of you might be thinking, oh, that doesn't sound so familiar. So it is technically the 21st of May, but it falls on a weekend. So therefore, that'll be the 23rd of May, 2022. And if you are lodging through a tax agent, possibly ourselves, that date is actually the 27th of June. And just, and again, sorry, it's normally the 25th of June, but it falls on a weekend. So 27 June 2022 is the date for that. And it is payment and lodgement, the same date. And just also, before I leave the overview, we've had a couple of questions that I thought we could answer in this section. One question was, can you cash out the taxable value of a benefit through doing a journal entry? So short answer to that is yes, you can. Essentially be timely about that, and it needs to be properly referable back to that particular FBT year. And secondly, we had a question, can you clarify the rules around conferences that include training and entertainment? So that one might take me the rest of the session, which I better not do to talk about. I'll hand back to James shortly, but just a couple of points if I may make on that one. Firstly, in terms of training, so under the law, we have a reference to what is eligible seminars, which is includes a 4-hour period. So if you're planning some training even yourselves or to attend, to put it on or to attend, just bearing in mind that you do need a sufficient content of actual work-related training. So there's those rules, 4 hours and above generally for some eligibility in terms of it being income tax deductible, and of course, not subject to FBT. And just lastly, on entertainment itself, if you are providing entertainment at a conference or your employees are attending a conference and there is a specific entertainment, like the Saturday night dinner or something like that, and it does appear to be entertainment, so it does cross over that line from sustenance, if you like, over to being entertained, there is a risk that FBT can apply. Now, of course, it comes down to the facts, but just really wanted to point that one out. So that's just a couple of things there, just covering a couple of questions off that we've received. So I'll now hand over to James, and he's going to talk about the recent law changes.
Thanks very much, Judy. So there's been a few bits and pieces that have changed in the FBT space of late. There's been some updated ATO guidance, there's been a little bit of case law, and there's also been some changes to the legislation. So we're going to go through car parking, some travel expenses, and some other issues around retraining and even who is an employee. So firstly, the long-awaited ruling on car parking benefits, TR 2021/2, was finally released, and this has significant changes, particularly for employers who might be located outside of CBDs. And what this ruling does is it picks up on some case law and changes the view that a car park which has a nil or low rate for short-term parking and effectively a penalty rate for all-day parking is no longer precluded from being a commercial parking station. And that used to be the case in previous ATO guidance, but that's no longer applicable. So what does that mean? Well, that means that if you're located near a shopping center or a hospital, and a lot of those sorts of places, or the car parks at those places, you might have free parking for 3 hours and then a $40 or $50 fee if you end up parking there all day. Previously, you didn't have to worry about FBT. That's no longer the case. Those car parks can now be commercial parking stations and can trigger FBT for you. Thankfully, the rules don't apply to the current FBT year, so the year that we're in at the moment that ends on the 31st of March, but it will apply from the next FBT year, from the 1st of April. So it's certainly something to keep in mind in terms of costs to your business, and particularly whether you're offering car parking to your staff. Helpfully, the ruling does set out some objective characteristics to determine what is commercial, because what the legislation actually requires you to do is put yourselves in the shoes of that commercial car parking station to work out whether you're operating it on a commercial basis, which is a little bit difficult for an outsider. So some of the characteristics are around advertising, whether the rates that they charge, how you access that car park. So there's a few things there that make it a little bit easier. As a little bit of an offset, and perhaps during COVID as well, there was an extension of the small business car parking exemption. So that now applies to businesses with turnover that doesn't exceed $50 million for the FBT year. So that's up from $10 million. So that does mean that perhaps some small additional small businesses will be excluded from car parking. But you have to remember that's only parking on the small business owner's premises. It's not parking at a commercial car parking station. So just something to be aware of there. Sticking with car parking, a little bit of a niche issue, but there was a case that followed all the way through to the full federal court, and that was the Federal Commissioner of Taxation versus Virgin Australia Regional Airlines. And this was a win for the ATO, and the issue in question here was the primary place of employment. Car parking fringe benefits arise if the car is parked at or in the vicinity of the primary place of employment of the employee. And so the question in this case was the primary place of employment the terminal, which was nearby where the cars were parked, or was it the actual aeroplane where the staff were actually working on during the day, which obviously left the terminal and spent all day flying around the country. And so which was the primary place of employment? And in the full federal court, the court said that when you're looking at primary place of employment, it's not just where the duties are performed, but it can be something that is defined in contract or in enterprise agreements that fixes your primary place of employment. And in that case, the court decided that it was the terminal where the staff had to attend, where they started their shifts, and that governed a lot of their awards. So the key takeaway from this, one, if you're around an airport, it becomes an issue, but I guess it just shows that the ATO, does take a very strict approach to the enforcement of the legislation, which is quite natural. They don't really have much in the way of discretion, but it does show the extent of car parking fringe benefits and how broadly they can apply. Again, the ruling around travel and transport expenses did take a long way to work its way through to a final ruling, and that's Taxation Ruling 2021/1. And this ruling covers when an income tax deduction is allowed for transport expenses. And so obviously the impact for fringe benefits tax is that if the employee would have been allowed a tax deduction for the transport expenses, then it makes it otherwise deductible for FBT. So effectively then there is no FBT on those expenses, which would be deductible had the employee incurred them themselves. The ruling sort of goes through a range of different scenarios. So the key principles there to be aware of is that home to work travel is generally not deductible. And that is the case regardless of whether the work is just 10 kilometers away or whether it's 500 kilometers away. The distance is not relevant. It really comes down to personal circumstances, so that if the employee chooses to live a long way from their work, then it doesn't make that travel deductible. That's just a personal choice. So the other principles that you'd need to look at when determining, are those expenses deductible, is the employer requiring the employee to travel? So it's not really around personal circumstances. It is around a direction of the employer. is it required, to carry out your work duties? Do you have to travel interstate frequently to attend meetings or oversee part of the business, which might make those sorts of expenses deductible? But if you choose to live in Sydney when all of your business is in Melbourne, then that's probably a personal choice and probably not deductible expenses for you. Some of the other factors there which came out of the old John Holland case, it was a few years ago now, whether the employer is asking for the travel to be undertaken, whether it happens on work time, and whether the employee's under the direction and control of the employer at that time. So that's that classic, traveling from a transit point for an airport, for example, out to a remote work site. In a similar vein, the ATO released a ruling around travel allowances and expenses related to accommodation and food and drink. And this is really aimed at trying to differentiate between what's a travel allowance and what's a living away from home allowance. And so things that are travel allowances fall into the income tax net, and you need to think about whether it's deductible for income tax purposes and therefore whether it's also otherwise deductible for FBT, or other expenses that might be a living away from home allowance, which are brought into the Fringe Benefits Tax net. And if you satisfy the conditions in the FBT rules, then could be exempt from FBT as a living away from home allowance. So again, in this very similar sorts of concepts to what we saw in the transport expense ruling. So it's looking at things, is the travel required because of the employee's personal circumstances? Or is it required because the employee's required or directed by their employer to live away from home, from their usual place of residence, to work at a different location for a period of time? And what's the employee doing at that location? How long is it? Is their family accompanying them? Those sorts of things. And those are the principles that then get applied when determining, are those expenses deductible, or indeed, is it a living away from home allowance? Now, from a practical perspective, helpfully there's a practical compliance guide that was released by the ATO at the same time. And this provides a number of examples around when that travel is going to be a travel allowance, or when it might be a living away from home allowance. And so some of this is a little bit of a return to historic days, where we start looking at the number of days. But some of the key things that demonstrate that an employee is traveling for work, and therefore, if they are receiving an allowance, they might be able to claim deductions against that allowance, is the length of time, so that it's for a short-term period, so no more than 21 days at a time continuously, and during the entire FBT year, it's fewer than 90 days in aggregate. It's not being provided as part of a salary packaging arrangement, and at the end of that period, the employee intends to return to their normal residence. So all of those things would suggest that it is a travel allowance, not a living away from home allowance, and therefore, provided you meet the other conditions for deductibility, you can treat that as being either deductible for income tax purposes in your own tax return, or otherwise deductible if those sorts of things are reimbursed or provided by the employer. Importantly, it doesn't apply to fly-in, fly-out workers or drive-in, drive-out workers. There are some specific rules around those employees. So definitely encourage you to have a look at that practical compliance guide, because it does provide a number of examples that make it a little bit easier to apply the legislation in practice, to apply the legislation and determine how the ATO is going to interpret the rules in practice. A change to legislation that came through that was flagged actually quite a while ago in the budget a couple of years back, and this is an exemption for retraining and reskilling support. So this is a case where an employee's role is made redundant or soon to be made redundant, and it allows training to be provided to them which is not directly related or sufficiently connected to their current employment. So if it was sufficiently connected to their current employment, then you'd expect it to be otherwise deductible. But if someone's in IT and they think, I'm going to be made redundant, so I'm going to train to become a chef, because it's not connected, it would otherwise not be exempt from FBT. So what these rules do is allow an exemption to provide, effectively allow people to sort of train in a new skill or a new field of employment to assist them to be redeployed either within the company or indeed outside of the company. So it covers a range of expenses that you would expect, course fees, books, but also travel and accommodation to attend that training. Importantly, it can't be done under a salary packaging arrangement. So these need to be additional benefits that are provided over and above what a regular salary would be for the employee. And it applies for this full FBT year because it's going back to the date that it was originally announced. A couple law changes that aren't in place yet, and an important one is around work-related COVID testing. So a bit earlier this year, the government announced that it would make work-related COVID testing exempt from FBT and tax deductible. Unfortunately, though, we've only got a very few parliamentary sitting days for this legislation to be enacted. So I guess there's a question as to whether it will find its way through into legislation. I think importantly, for now, keep a record of your expenses is probably the key thing there. We would expect this announcement would find its way into legislation. It's very sensible, but until we see the legislation, until it's enacted, the old rules apply. And unfortunately, work-related COVID testing is probably going to be a private expense, and if it's reimbursed, and it's not otherwise minor and infrequent, so you can always rely on that exemption to fall out. But if you're providing employees who have to test twice weekly, for example, the cost might exceed, the $300 if you're buying a whole bunch of RATS tests for your staff. So keep your expenses and just keep an eye out for changes there. We also haven't seen much in the way of changes to corporate records. So they're still required, or they're still going through a consultation process as to whether employers can rely on existing corporate records for FBT. Two other things that are in haven't come through in terms of legislative changes, and this goes to a couple of questions we received. There is nothing around electric vehicles and hybrids. So those continue to be problematic from an FBT perspective, and we haven't seen anything from the government in terms of changes to perhaps how you value those sorts of vehicles, because they really don't work very well in the FBT rules. So we haven't seen anything on that. And also a question around the minor and infrequent benefit. There's been no suggestion that the $300 cap will increase. It changed from, I think, $100 to $300 many years ago, but there's no suggestion that that is going to increase anytime soon. I'll touch on a recent case which is very relevant for employers, particularly because, as Judy mentioned, items which are subject to FBT or individuals who are subject to FBT are employees who are employees at common law, plus some extensions. There were two recent cases that found its way all the way through to the High Court, where the question was around whether the individuals were actually employees under the common law definition or not. And the High Court have pivoted from previous rulings, both at lower court levels, around whether, or what are the things to look at when determining whether an individual is a common law employee. And for those of us who've been practicing this area for a little bit of time, we're all very familiar with the multifactorial approach. So you look at all the things that are being done by the individual to determine whether they're a common law employee or not. Who's got control over what they do? Can they subcontract the work? Those sorts of things. But what the High Court said is that, well, you only need to look at all those things if your written contract it doesn't tell you or doesn't give you enough information around whether the individual is a common law employee. So this is really a return to form over substance. So if you have a contract that sets out all of the terms and conditions and covers all of the factors that you would need to consider whether someone's a common law employee or not, then you don't need to look beyond the written contract to actually what happened in practice. Now, I caveat to say it's within reason. You cannot make someone a contractor merely by writing into a contract to say you are a contractor, when everything else in the contract suggests that they are an employee. It does need to be within reason, but it certainly is a return to form over substance. So certainly, looking at the contracts that you have with your workforce, which are not clearly employees in that grey area, is something that all employers or companies should be doing. Sorry, not employers, or companies should be doing, just to make sure that they're treating those workers correctly. And I am back to Judy, who's going to run through some of the COVID-19 specific issues in relation to FBT.
Great. Thanks very much for that, James. And just before I kick off, I'll just quickly take a couple of questions. There was a question in relation to the journal entry that we talked about earlier for employee contributions. And yes, the ATO approach in recent years is that you still need to ensure that, of course, you do have the details, the evidence behind that journal entry. So just to clarify, that's right. You do have to ensure that that transaction is in fact a post-tax employee contribution. It's something that's agreed with the employee, and it is referable to that FBT year and that particular benefit. So thank you for that question. And we also had a question, what are your thoughts on if you start working from home early at 6 a.m., which I can relate to, sorry, here, because I do this occasionally myself, but under a flexible working arrangement with the employer, and then drive to the office at the office opening at 8 a.m. Is that private travel? So unfortunately, that is private travel. So that would be private home to work travel. That is effectively, from the ATO's view, a choice of where you live and where you work, and unfortunately would not be non-private, that would be private. And there is just another question that's popped
Judy,
in. So
we're just running a little bit short of time, so maybe we can pick up some of the other questions in our responses later on. Just mindful.
James might have saved me on that one, because that was a LAFA versus travel question, so they're always quite detailed. So great. So thank you. Please keep those questions coming, and we will try our best to get back to those at the end. So I just wanted to cover now on the COVID-19 and FBT. Some of these you might be familiar with, so we'll just briefly go through that. This particular slide here, James has kindly referred a little bit to COVID testing just then. And so just quickly noting that the exemptions around COVID testing are limited. One exemption is where the testing is actually carried out by a legally qualified medical practitioner, and that it's available to all the employees. There's also can be an exemption in relation to where employees are actually travelling for work, and the minor benefit exemption, that less than 300 infrequent irregular exemption may also apply. Now, James has already mentioned the testing there in the legislative change that we're waiting on, but so I will just jump over that one. But that would be welcome to have an exemption for that as well. That's on its way. This slide, now it comes from a fact sheet. I'm going to try and be clever here, so just bear with me if this does not exactly work out. But I just was going to give everyone the link to this fact sheet on the ATO website. So I'm just hopefully sending that on to the lovely Maddie at BDO at the moment, who will circulate that around. I found it actually a little bit difficult to locate this fact sheet, to be honest. So I just wanted to cover on the main I guess, message, the summary near the back of that fact sheet. And this is all in relation to incentives for the vaccination or the booster shot. I'd just like to run down the FBT column quickly first. So cash payments, paid leave to get it or paid leave if there's side effects, and the transport side. So that's not subject to FBT. That can potentially fall into the salary or wages basket, which I'll come back to in a moment. So that's not FBT. If there are goods and services, for example, vouchers that are offered by the employer, then that could very well be subject to FBT. The minor benefit exemption may apply there, or there might even be what we call an in-house reduction, which is if the employer was in the business of that particular service and they give that to you, service or good, there might be some reductions around that. But generally, the message there is to be careful and aware that there may be an FBT implication of that. Competition entries given to an employee is not subject to FBT, but the employee that wins the prize essentially can be, and points also redeemed for goods and services is subject to FBT. Just quickly want to take the PAYG withholding and the super guarantee columns together because they do tend to go hand in hand. So essentially you'll see there that where there are cash payments, leave those first few lines there, then you're going to have PAYG withholding and super guarantee on those. And then once FBT is potentially the issue there, you can see the no's that that's not going to be a salary or wages, so that's not going to be in that basket there. Also, just in relation to super guarantee, I just wanted to mention briefly, James did touch on the recent High Court cases there about employee versus contractors. That is just a really big topic for us, like James and I working in this area at the moment. We're doing lots of work around voluntary disclosures for super guarantee, and quite a bit of that does deal around that sort of contractor issue, because if a person is engaged principally for their labour, then they may fall into the super guarantee net as an employee. So just today, of course, our focus is on FBT, but we can advise you, and so can your local BDO advisor, on some of those other implications around these things as well. So just moving on now to work from home expenses. So where there are some benefits that are provided when the person is actually been working from home, very common due to COVID-19. So eligible work-related items such as laptops, mobiles, tablets, that kind of thing, primarily for use in employees' employment. Generally, there is an exemption from that. Some protective clothing exemptions apply as well. And just bear in mind that we also do have that minor benefits at less than 300 area, and otherwise deductible if it would have been a deduction for the employee if they'd paid for it themselves. That can also provide some relief in this area. So stationery, consumables, equipment less than 300, use of company-owned office equipment, reimbursement of business portion of home internet and telephone. So that's just something to bear in mind on that one. And also just on cars, this may be familiar to some of you that we touched on in the previous FBT year as well. And just the message there is if a car is normally provided to an employee and available for their private use, but if they do take it back to the business premises and it is actually garage there, for example, there might be, say, a lockdown that might have occurred, the car is actually returned to the business premises with the keys, so there's no access, then there can be no FBT for that period of time. So that's something that might also be relevant then in the 2022 FBT year. Just switching over to car parking now. So James has already discussed generally car parking fringe benefits. In terms of COVID in particular, if the car park was closed, then there's no benefit on those days that it was closed. And also in terms of valuing car park fringe benefits, the availability period, there will be none in terms of that statutory method that you might choose to value car park fringe benefits. And also, if there's some reduced car park rates around 1 April that may be taken into account, and to keep an eye on the thresholds depending on where you are in your part of Australia. If there is all the commercial parking stations within 1K radius that do charge less than $9.25, which is the threshold for car parking on 1 April 2021, then that may mean no benefits. Of course, the ATO want to see a representative period of that rate, which is generally a 4-week period. And just also mentioning that you might want to look at other ways of valuing car parks, valuation method in case car parking rates have been reduced in your area of Australia, or the actual method keeping records when people are parking of their actual parking. And lastly, on COVID, entertainment. So that's, of course, thrown up in the air a little bit with the whole impact of COVID-19 and staying home. And so it just brings to mind that it might be worth your while to have a look at the 2 common methods, the 50-50 method, and also back to your actual entertainment that's taken place, just to see which might produce the better result for your organisation. And on the slide there, you can see that we do mention there's greater scope for minor and infrequent exemptions to apply, just noting that that's unfortunately not the case for not-for-profits, where they have some different rules, which I will touch on soon in terms of not-for-profits. And just the last point on that slide does sit very nicely in the area of not-for-profits for those of you involved there. Just also again for this 2022 FBT year, ATO will not apply compliance resources, won't come knocking in terms of expenditure where meals are provided by authorised suppliers at 1 April 21, and also where the restaurants are closed. So that's all around the fact that you have to show that you're having entertainment. So it's usually eating out. If the restaurant's closed and instead you're having meals brought in, then that's going to be accepted. So now I'll just hand back to James, who will take us through some ATO focus areas.
Thanks, Judy. So the focus areas that the ATO, or that we've seen the ATO spend resources examining, and also from their own guidance that they put out. And I guess this comes from the fact that the ATO acknowledges that FBT is one of the taxes where they think that the gap between what should be being recovered for FBT and what's actually being recovered is quite high. It's like plus 20%. So the ATO is spending a lot of time looking at providing more information and guidance to employers to help them comply with their FBT obligations. But a theme through these sorts of focus areas is the ability of the ATO to cross-match data. So if we look at things like motor vehicles, the ATO spends a lot of time, cross-referencing, vehicle ownership to FBT. So particularly where obviously vehicles are registered in a business name and there's no amount that's being picked up or reported for FBT, that might encourage the ATO to have a look at those organisations to really test whether there is any private use of that particular motor vehicle. And I know certainly from discussions with the ATO, and this is probably more in the small business space, but certainly the ATO, quite often, comes up with errors in those scenarios where where that car is actually garaged at home, so there is deemed to be private use. With entertainment, again, the ATO spends time looking at what sort of deductions are being claimed in the corporate income tax return for entertainment, and then because ordinarily entertainment would be non-deductible, but if the deduction is claimed in the corporate tax return, it would suggest that FBT has been paid on those entertainment expenses. And then if the company is not filing an FBT return, or if there's a mismatch between what is being included in the FBT return and the deduction in the corporate tax return, that's likely to prompt an inquiry from the ATO. So again, access to different bits of information allows the ATO to target its compliance activities. Car park valuations, the ATO obviously has easy access to where employers are located, where their businesses are operating from. And one of the difficult things about car parking is that it's up to each individual employer to determine whether they're providing car parking, whether there is a car park with a 1K radius that's charging more than the threshold car parking rate. So if you don't do the work and look at all of the car parks in that 1K radius, and your neighbour in your factory unit or where your office is located is doing that work and find somewhere, then potentially one employer is paying FBT and one is not. And again, the ATO has access to all of this information, so again might raise a question if there's a nil or a low valuation for car parking. Judy touched on COVID-19 benefits. So we would hope that the ATO is being perhaps generous in its views around things like testing and the like, the application of the minor and infrequent exemption, because clearly there's been a lot of things that have been happening that are outside of the control of employers that they're doing to really try and help their staff, support them through what's been a very difficult time for everyone. But certainly the ATO is putting out a lot of guidance, as Judy mentioned, with things like the incentives and the like. But it's just important to make sure that you are treating all of those items correctly. Employee contributions continue to be an area where the ATO finds lots of errors. So this is where on the FBT return, you see a benefit being provided and a reduction because of an employee contribution. Yet on the corporate tax return, there's no amount that's being reported as income or being received by the employer, or indeed no amount coming through for GST. So again, it's a relatively easy check for the ATO to do to make sure that employers are doing the right thing. And finally, reportable fringe benefits. And I find this just astounding, that the ATO is still finding employers who are reporting fringe benefits amounts on the income statement or PAYG payment summary or group certificate, depending on your age as to how you define that, but not filing an FBT return. And that really seems a strange outcome to me, because I would have thought you kind of run the other way around. You prepare your FBT return first, and then you kind of deal with the reportables off the back of that. But it seems that some companies are forgetting to file the FBT return, but are still picking up the reportable. So again, a really easy pickup for the ATO. So that's just makes their lives easier. So if you do these sorts of things right, then you're probably not going to get picked up by the ATO, at least as part of their data matching, and you show that you're complying with the obligations in the FBT space. Back to Judy.
Great, thank you, James. Okay, so for those of you who are in the not-for-profit industry or advising not-for-profit employers, there are some different rules. So firstly, just have a slide here that covers the FBT exempt not-for-profit employers and the FBT rebatable. So if you are or advising someone's organisation such as a public benevolent institution, so the big names there, Cancer Council, Vinnie's, Salvos, etc. So in that kind of league, if you like, that kind of sort of area, public benevolent institutions, they are generally FBT exempt, and so is the health promotion charities. Now, but unfortunately, they do have caps, so exempt only up to $30,000. The fun part, I'm going to use that term loosely, for those of you advising in this area, is it's actually a grossed up amount of $30,000, so not real dollars. So you have to then work out what your applicable gross up rate is, type 1 or type 2, to actually convert that back down into your real dollars, so around 15,000 in real dollars. That hasn't changed for the year, and I'll just jump down to the rebatables as well. They actually have not an exemption, but instead there is a rebate at 47%, but it is also capped at that $30,000 grossed up amount. So in a way, the FBT, if you are a rebatable employer, is half. Close enough, 47% rebate, so 53% effectively there. So that's just generally what that rebate does. And you can see that that is of quite benefit as well. And just also in the middle there, so if we go back to FBT exempt employers for a moment, if that's in the area of public hospitals or not-for-profit, private hospitals or AMBOs, in those areas, they are similar to your PBIs with having an exemption, but it's capped at 17. Across the board, for whether the employer is FBT exempt or FBT rebatable, there is another cap that's applied for a few years now, which is aimed at salary packaged meal entertainment and also that entertainment facility leasing expense area, and that's capped at $5,000, and that's a grossed up cap as well. So entertainment facility leasing, I know that's a bit of a mouthful there, but that's essentially if you actually hire out, say, the whole venue or the whole a certain area, or like a boat, or that might actually be more in the area of facility leasing. Now, just before I leave not-for-profits, I just wanted to raise a couple more quick matters. I know we've only got a little bit of time left, so I'm just going to very quickly mention that tax-exempt body entertainment is something to look out for if you are a not-for-profit employer. So if that's because generally in the not-for-profit space, you would be income tax exempt. Well, that actually triggers this category of entertainment. So if you provide entertainment, it's likely to be categorized then as tax exempt body entertainment. The message is the minor benefit exemption, the one that's less than 300 infrequent irregular, has very limited application. So if you're providing Christmas parties, for example, there is a possibility that you will actually pay FBT on that. Generally, we're used to that being perhaps an exemption under minor benefit, but not for not-for-profits. So that's just one point I just wanted to make very quickly. And secondly, on the car parking. So we've talked a lot about car parking today. Some good news is that most not-for-profits, or well, I shouldn't say maybe most, but ones that are charities, scientific institutions and public educational institutions have their own exemption from car parking. And just lastly, we talked about tax exemption, income tax exemption before in terms of that link back to entertainment. I just wanted to note very quickly on that topic that if you are a not-for-profit organisation and you're not a charity, so you're non-charity, just bear in mind that you will need to lodge an annual self-review return with the ATO from 1 July 2023. And I've just changed gears. I'm talking about income tax exemption now, not FBT. So you had to self-assess that previously, but from 1 July 23, you actually have to lodge that basis of why you think your organisation is income tax exempt with the ATO. And I think I'm also just going to quickly mention with rates and thresholds. Now, this is a nice fast one because James and I just really wanted to put a few of the rates and thresholds into the pack for your reference. So you can see some of the key ones there, the FBT rate, the gross up rates, and some of the thresholds you might need, like car parking and your statutory rate for things like loan fringe benefits. That sort of thing is on that slide. And we've just got 2 other slides which provide living away from home in Australia rates. This is all from Tax Determination 2021/3. And the last slide is our living away from home overseas rates. So I'd just like to thank my co-presenter James very much too for the valuable, insightful presentation that he's given. And I'm just going to hand back to James now to close out our session.
Thanks very much, Judy. And look, thank you everyone for joining us today. There were a bunch more questions coming through, and I apologize if we didn't get to all of them. But as I mentioned, Judy and I will pick them up and come back to you. So I really appreciate your participation through that way. Here, a list of all the BDO experts across the country who are as excited as Judy and I are about the upcoming FBT season. Following this session, we will send you out an email with a link to the slides so you can pick it up and share them around with your colleagues and friends and family. We'll also ask for a little bit of feedback as well, what you found positive about this session, or if there's things that you'd like to include or see added in future. And finally, we'll also include a link to the upcoming federal budget webinars. So the budget is only days away, and we're eagerly waiting for what that budget might hold from a tax perspective, particularly in the space of employment taxes. So once again, thank you very much everyone for joining us today. Thank you, Judy, and thank you for all the people behind the scenes who helped make this such a great session. Thank you very much, everyone.
Bye-bye.